All right, hopefully you guys can hear me. Happy Saturday. I actually have some time on my schedule to do some charting. And give me 1 second. There we go. I'm waiting to see if we can get some people on. Here we go. Here it is. Bam. All right, let me share my screen. Okay, so we're gonna get to it regardless. There may be people that hop on or not. What we're gonna do is we're gonna chart DXY. It's something that I've been doing on here quite a bit, or I just started, I should say. However, a lot of you gave me some really awesome feedback on how it helped you with your trading. So we have NFP coming up next week, and I figured why not why not do this? Also, if you've been watching my Instagram reels or my TikTok videos, you will see where I just discussed recently the importance of the monthly candle. So what we're going to do today is we're going to go over DXY. We're going to review that monthly candle just so you can see like live action what I do when I'm doing this, like when I'm checking that candle or when I'm checking that chart, and how I'm able to kind of like assess what's going to happen for NFP. So I'm going to show you that. I'm going to be using basic levels. So this is going to be very simple just off of what's in my free content. I'm not going to use any of my advanced techniques that are in my VIP courses. This way anyone can follow along, because if you are watching and you want to learn this, it's in my free course, like this process, okay? So you should be able to see my screen. And recently, especially this fourth quarter, I've been showing the yellow folders. And I've noticed that prior, I would only do high impact events, which if you go to this filter button, I would only do red and orange. And sometimes things would happen in the chart that were like kind of catching me off guard. And I realized that some of the yellow folders were actually having an impact on the charts. I've been trading for a really long time, and I can tell you not often do I have yellow folders affect my charts. And it has been recently. So again, trading is something where you are forever going to be learning. We're constantly just evolving, and we're going to be fine tuning things. And the key to being successful at trading, besides discipline, is going to be adaptability. Once you think you got it, the market's going to start switching up its behavioral patterns. And you have to go back and relearn the process so that you can be successful. And that's why it's really important for you to understand how to back test and study a pair and know what to look for so that you can have success in the future with being able to adapt to the market conditions. That's key. All right, so we have a lot of news, basically news every day this week, which is really cool. Now this is good for the dollar, okay? Because the dollar is going to affect our crypto, it's going to affect our stocks, our futures, our forex pairs. So we want to know what this is, and depending on what you trade, there usually is like a negative correlation with the dollar, kind of giving you an indication of which way your ticker or your pair may be going. So that's something to just take into consideration. All right, let's get to it. All right, so we're looking at the monthly, and as we can see, we were in this downtrend. We're bouncing up of market structure right here where we broke and retest, and I'm on the monthly, you guys. And then same thing kind of happened right here. We were respecting the support. So at this moment, when I look at this particular pattern, I can, oh, not pattern, but this chart, I see that we have an upward trend. We're trying to go up, okay? We're trying to go up. We rejected this previous structure up here back on in October, excuse me, and there's been some bearish momentum, and it's now starting to create lower highs. Does this take away of the fact that we're going up? No, we're just making a deeper pullback. So as I look at this, I think about the trend line, and I don't adjust my trend line because usually the market will go right to it if it breaks structure. So what we're going to do is we're going to look at the structure, and as I look at this, I can see price stopped here for a valid reason. Now I'm going to try to get as many touches as possible. There is going to be some slippage here, but it is what it is. That's all. I mean, I'll adjust it, right? But you can see where we have this resistance, and for the most part, it was respected. It's a little bit of slippage right here, and I'm going to include the wick because the wick is price action on a smaller time frame. So what is a wick on the monthly is going to be candles on the daily, the 4 hour, the 1 hour, and I don't want to have slippage. So I realized that we've broken through that. We have a bearish candlestick pattern. Now, ideally, what I'm going to do is identify the close of that particular candle, and I want to see price stay underneath that section. So I want price to stay underneath there for me to anticipate bearish momentum. Now, there is a really strong support here, okay? You can see where price attempted to reach this area, which are our wicks, but it was unable to close below. So two things are going to happen here if the market achieves approaching this particular level. We're either going to repeat what we've done in the past, which is basically attempt to break it and come right back up, and that could lead to a manipulation of the market, which is typically about 150 to 200 points, especially with more pips, depending on what you're trading. So that's something to take into consideration, or it's finally going to break it, come back down and do a bigger retest to that monthly trend line. Now, I don't keep my trend lines up on higher time frames just because I like to label my structure and my structure does well. There's no need for me to do this because if price decided to come to this area, by the time it gets down here, it's going to take months. So there's unless I'm never going to touch my charts, there's no point in me keeping this trend line here. What I am going to do is see if I can identify some structure in that area, and that structure is going to help me just stay on track. I don't really need to do it until I know for sure that price is going to break this support. But what I'm looking for in the future is the next area of structure, which is going to be right around 92.40, is where I see, okay, that's a bounce of my trend line possibly. It could go up a little bit higher, but that's what I'm looking at. That's my area. So we're going to delete that. And now what we're going to do is we're going to go to the weekly. We have a bearish candlestick pattern. There's no need for me to draw a resistance level because there's bearish momentum. And if this does go up, then I will notate that on a lower time frame. But as of right now, I'm looking for it to go down, and I'm actually kind of wanting to see how it reacts to 101.672. So that's the area I'm interested in. So I have 3 monthly levels, and I'm just going to keep there. Now I'm going to go to my weekly, and what I'm looking for is to see how price is reacting. So last week we were able to close underneath that daily level, which is really good. We want to see on the daily or the 4-hour, right, that the market does essentially a break and a retest for a continuation down. That's what we're looking for. Now, I don't need to notate any bearish support level, or levels or support levels. What I need to be mindful of, if there is slippage, where could I take this up to? So I am going to draw a weekly level just to be on the safe side. And there's probably going to be something on the daily as well. But I'm going to do this just to ensure I get nice touches. Nothing's being broken unless it is a break of structure. So I'm going to identify that as my weekly. Now I go down to my daily. So I'm doing my top-down analysis. Now this is very important. Now I can see a lot going on here. We can see where structure it's been breaking, you guys. Look, here's our previous support. It broke and retested it. Our support right here, we end up breaking and retesting because it ended up respecting this low instead. So this structure instead is what it respected. Now we have our break and a retest. We have a break and a retest. So two things are going to happen here. We're going to either stop at market structure and do a bigger retest up, or the market's going to create a lower low and create an additional wave in that trend, which is good. That means that's letting us know that we are in a bearish trend. So that's what we're going to be mindful of. If you're a Fibonacci trader, this is where you would draw your fib and identify your 0 and your minus 27. Your minus 27 is going to show you the continuation of the trend. 0 is going to be a hit of market structure, creating a double bottom and possibly switching up as far as like a reversal or making a bigger pullback. So for my more advanced traders, that's what that means. So I'm going to notate this support right here. And I'm going to try not to cut too many candles. It's going to drive me nuts. But I'm going to do that just because recently the market has respected this area. So we have this spinning top here, and this is essentially how we ended this week. So I'm going to wait to see if it goes to 102.653, see if we get a double top to shoot up, or see if it breaks and retests and gives us a continuation to that monthly level that I had notated. All right. So that's what I'm looking for with the dollar. I do like to go to the 4-hour just to identify mini structure. I use my 4-hour for entries. They're really, really good. And I compound on smaller time frames. So I compound like on the 15-minute, the 1 hour, the 4-hour, depending on what I'm doing. And this is where I'm going to find structure within the bigger structure, okay, within the higher time frame structure. So I'm going to identify this area right here just because I see respect, respect, respect. So that's going to be my 4-hour level. Okay, what I'm going to do is wait to see how it reacts to this area. If it does push up, then it pushes up. I'm going to attempt to draw a trend line, and I like to just cover everything wick to wick. I don't cut off any bodies. I don't ever do that. I've learned that when I do that, I end up getting manipulated because I'm messing with the trend. So a higher probability setup usually gives me this. So we are either going to bounce off of this area and push up. So the next support is going to be right here. And let's just look to ensure that we are doing this nicely. And then I have another area of support here, but let me see, because there's a lot of slippage here. It's not the best. I think I want to say I like this better if I have to be honest, but I know DXY. So even though I don't like how this looks, I'm going to keep the structure here because I just know how DXY works. All right, so we're either going to get a break and retest here. Now we need to break this area here to have a change in the trend. Otherwise, this is just a retest on the bigger time frame of the structure here or here. So it's going to be here or here, but it's just going to do that to keep going down on the higher time frame. So we're not changing direction until this is broken, and then this previous high is turned into support. I want to make that very clear. So you have to understand that even though you may be getting a break and retest of your trend line, you may have an inverted head and shoulders forming. It is not 100% bullish as far as swing trading until we get a break of this structure. Okay, you can see where we had a lot of consolidation. We're now just doing a retest from the higher time frame if we go up. Now, if this does not go up, then we're good. Like we got our levels already situated. We're going to look for it to, I wouldn't do 4-hour. I would wait for this structure right here to break and retest from the daily and then see if we can take it to the monthly. So that's what I'm looking for with the dollar. Remember that if the dollar is bearish, usually NAS, US 30, crypto, anything with USD on the right hand side is going to be bullish and vice versa. So I want you to study this and see if this helps you with your trading. Again, I don't want you to use this as an indication to get into a trade. You should be charting the dollar every week just so you can have an understanding of the sentiment of the market. So you can see, okay, I see the dollar super bearish. Most likely if I'm trading stocks or if I'm trading gold, I'm going to be most likely like seeing some bullish opportunities. So I'm not going to make that assumption. I'm going to be prepared. I'm going to identify the areas for the bullish confirmations of the trade and bearish, but ideally bullish because you see it's bearish technically, and you're going to have those alerts set. If those alerts don't go off and you don't get the confirmations that you need, then there's no need for you to take the buy. You need to just adapt to what the market is giving you, and you should be prepared already based off the levels that I gave you. So we'll do a follow-up video or reel on this and see how it goes. Anyway, y'all have a great weekend and bye. Now I got to figure out how to stop this meeting, y'all.